Good morning, everyone. We want to welcome everyone to the TradeXchange a week ahead webinar. We're going to be doing a pretty quickly today. Not much been happening, even though we have been having nonstop news headlines. We're not seeing that much volatility in markets since basically the beginning of April. The markets continue to trade in tight ranges. This week, the S&P and the Dow ended around 1% lower, and the Nasdaq basically flat. We saw strength in some of the key top Nasdaq names this week, as it's been the play for the past few months, since basically the beginning of the year, since Nasdaq has outperformed all other indices year to date. Weakness, though, we did see in energy this week. Gasoline down 5%, crude oil down about 7%, nat gas as well down about 7%. On Friday, we had the employment report, which beat across the board. Payrolls higher at 253,000, unemployment rate better at 3.4%, the lowest level since 1969. And average hourly earnings month over month and year over year, both higher. Early in the week, we had the JOLT job number that showed job openings declining, but yet the labor market continues to remain very tight. The Fed raised 25 basis points on Wednesday for the 10th time in a row. The Fed hinted at a possible pause to their rate hike cycle. The key line that a lot of traders have been discussing that was omitted from the Fed statement was, quote unquote, anticipates that some additional policy firming may be appropriate. That line was omitted from this past week's statement, which traders see as the possibility that a pause is coming. Traders, though, did take a step back following Powell's comments that a possible pivot to cutting rates might not happen as quick as the markets are hoping for. So we did see a lot of volatility on Wednesday following the Fed statement and Fed Chair Powell's conference. We saw volatility as well come back into the regional banks, with weakness on headlines with PACW and WAL. Keep in mind, members, these are just headlines that are circulated throughout the week. One interesting aspect was the headlines on WAL, that WAL was the lines came out and basically said are all untrue. So we're taking these with a grain of salt, but we are seeing the volatility back into these regional banks headed by that PACW and WAL. With earnings season almost over, about 85% of the S&P 500 companies have come out. Earnings are coming in better than expected. Research companies and analyst firms are raising earnings outlook for the rest of 2023 following this strong start in these earnings reports. What's on the horizon? Continued debt limit talk, debt ceiling talk, the CPI and PPI this week, and we still have a few top company earnings expected throughout the week. The key members is that CPI report on Wednesday. Keep in mind, that is one of the key inflationary metrics that are followed by the Fed. So we are waiting to see how that report comes in. Will it come in hotter? Will it come in colder? And the impact it has on markets and rates. Now, a quick look at your week ahead report. Top earnings for the week. A few top names still up there. We have Disney, DIS, EA on the gaming side with EA, Occidental, OXY, Roblox, RBLX, Twilio, TWLO, Under Armour, UA, and Wendy's, WEN. Monday, not too much on the agenda, a pretty slow day. On Tuesday, we do have some Fed speak Williams, and President Biden is scheduled to meet on the debt limit. Wednesday, we have that CPI report, and the NATO defense chiefs meet in Brussels. Overseas, we have Germany's CPI and China's CPI and PPI. Thursday, on the U.S. side, we have the PPI final, on that correction on that spelling, but PPI final and jobless claims. We also have Fed Speak Waller on Thursday. Friday, we have our import and export prices and consumer sentiment and Fed Speak Jefferson. As always, we have your company events for the week, analyst calls, and your top shareholder meetings, as well as your top conferences for the week. As always, members, if anyone has any comments or questions, you can reach out to us via email or ask the desk in the news desk platform. U.S. economic calendar for the week. Not much activity on Monday. On Tuesday, we have your Fed Speak, John Williams. Not much going on Tuesday either. Wednesday, we have the all-important CPI report. Thursday, we have jobless claims, PPI final, and Fed Speak Waller. On Friday, import and export prices, consumer sentiment, and Fed Speak Jefferson. A pretty lackluster week. As you can see on the international side as well, not much going on. But it all goes back to this key report on Wednesday, the CPI report. It feels like they left that report alone just for this week because it could be that important. So we'll see what happens on that report on Wednesday morning. Fed speaker schedule breakdown, who's speaking at one time, and basically where they're speaking. A brief week ahead TradeX commentary. Earnings for the week still have a full list, members, but the key top S&P 500 companies have basically reported. As we mentioned before, we're at about 85% reported. So we are seeing a lot of smaller cap names starting to come on the earnings side. Fear and greed continues to be on the greed side, members. We've been on greed for the past few weeks. So the mindset right now is on that bullish tilt. Industry comparisons, the NASDAQ, as you can see, still strong, been the strongest all year so far. The S&P as well, and the Dow. So we are seeing that the weakness has been in the Dow. Clearly, it's been a lot of these energy names, as you can see on your weekly sector performance, how weak energy has been for the week. Down to close to 6%. Weakness as well in communication services and materials. The strength continuing in technology, and a small little bit in utilities and healthcare. Your target rate probabilities for that, the current for your correction, it's going to be on for your July meeting. Current target rate 5 to 5.25%. We are basically expecting a no rate hike or drop as of right now. The current probabilities are equal on that 5%. Looking at your 10-year year, constant maturity minus your 2-year and minus spot 48. Year-to-date percent returns, members. Sugar continuing to be the strongest. NASDAQ still up there as one of the top indices for our, the year-to-date as of right now. Coffee strength continuing. Gold, silver saw some strength this week. Weakness continuing though, members, in that energy with natural gas, heating oil, crude oil, and gasoline all taking a hit the past week. Your AAII investor sentiment survey, nothing on the bullish mindset, basically staying the same from the previous weeks. We are seeing the bearish mindset, though, members, has seen a small uptick from 38.5 to 44.9, taking away a little bit of the neutral mentality. So with recent movement in markets, we are starting to see a little shift on the bearish mindset. So we'll see if that moves into actual market activity. Sector outlook for the week: information tech, communication services, and consumer discretion continue to stay top 3, with energy and financials continuing to be the weaker of the group. With the regional banks headlines on the financials and the weaknesses we've been seeing in nat gas and crude oil and gasoline, we are seeing that weakness correlate into the energy sector. You have your IPO lockup expirations, IPO openings for the week, and your FDA calendar. Now, a quick peek at some charts real quick, members. Looking at your gold, no changes to the chart, members. Last week we mentioned how that 2,000 level is so important. We traded all week right around that level. Once we broke 2,000 this week, as we've been talking about how strong it's been, we saw a volume move correlate with this move to the upside at 2085. We retraced back to about 2024. So we're still above that 2000 level, which is the bullish field, but still right hovering around that level. As we can see it traded above, coming back to 2000. It's like a tractor beam, that 2000 level. So we're watching that very close moving forward. SPY daily, you're going to see, remember, it's basically ranges being built across a lot of sectors and markets. Case in point, the SPY. This is a large range being built right here on the spiders, with no changes to the chart. This CPI report, we could expect to see some volatility, possibly to the up and down side. So we're watching these charts very closely. And same with the Nasdaq, basically right in that range, but the Nasdaq a little bit stronger. Look at it's another test of that 12,250s level. No changes to the chart, members. That level has been in play for quite some time. Close right around that 12,250s. So we're watching this level very closely. We could see something very similar to what we saw in July of last year, where we saw a break above that resistance and a strong move. But keep in mind, members, we are needing to see a volume move, and the Nasdaq really hasn't been showing too much volume as of late. So we're watching this one very closely. SPY daily on the moving average and trend look. Same with your triple Qs, IWMs, your 10-year yield. Another look at your 10-year yield. No changes to the chart. Continues to trade in that range. It's been in that range for quite some time. So we're waiting to see a breakdown to the downside or a possible upside break along this trend line to see which direction is next. But it's building a range. You'll see that continuing. Diamonds on a moving average and trend look. IWM, another range being built at this level. Lower than the rest, but still being built between the 170 to 180s. Watching this very closely, members. We have a downtrend. We have that 170s that has been tested and reversed 2 times already. So we're watching this 170 level very closely and a 180 to the upside on those IWMs. HYG daily on a moving average and trend look. S&P 500. Range again. No changes to the chart. We're still in this tight range of 4,000 to 4,200. We continue to hover and trade around that 4,100 level. Just like the 2,000 level in gold. This is another quote-unquote tractor beam level, 4,100. Breaking, popping back up. Breaking, popping back up. Breaking, popping back up. So it's a level to watch, 4,100. With that volume, we're waiting for the volume to come in, waiting to see a possible upside break or a downside move very closely. Keep in mind, on the downside, members, we still have that gap here below that 4,000 level that traders are watching. But also, we have that upside gap above 42 that has never been filled. So a very close watch on these moves on both upside and downside for possible gap fills as well. VIX, what can we say? It's very interesting routine action. We're looking at a possible build of a range like we had back here currently at this level. So we're watching this very closely on the VIX. Oil, no changes to the chart. We mentioned last week to watch the 75 level support as a key for the next move. We broke that 75 on volume and tested 63.64. We did end the week with a strong bullish reversal, though. Back above 70 and closing at 71.32. Watching oil very closely because we are testing previous lows. Below this, members, we're going to have to go back years to see what the next level could possibly be. But as of right now, for a pure bearish move, it's below $65 and watching an upside move around 75 as a key level to be watching for a bullish upside reversal. US dollar daily, members, it's been yet again another range being built. It feels like something is brewing for a very large move in either direction. So we're watching these charts very closely. No changes to the chart. Still in that 101 or 102 level on the US dollar. Bitcoin, same thing. The 28,000 or 30,000 range. Tried to break above, could not get that volume. There's no volume. If we had a volume spike, we could have seen an indication, but no volume. Broke that 30,000 again. Tried to trade right back to it. Ended the week at 29,725. Watching Bitcoin, 30,000 upside, around that 2750 on the downside move right here. SMH, and finally your euro, another range being built between those levels. We mentioned that a key level resistance is the 110s. We hit one spot 10948 in that 110s level without an upside break. So we're watching that for a possible one spot 11 print on an upside move, but has not happened as of yet. Downside support around the 109s, very tight range being built as well. We could see a very important move in these currencies once these ranges are broken, as we saw earlier on the US dollar. So that's your week ahead, members. We always appreciate questions and comments. We had a few questions as always. Our thoughts for the week. Members, it's all about the CPI this week. Clearly not much else on the agenda. Earnings season is basically slowing down. You have the Fed speakers, not much going on for the week outside of any unexpected interviews or whatnot. But right now, in our opinion, it's all about that CPI report on Wednesday and that Thursday PPI report. We're going to be focusing on those 2 days. We are going into the summer season, and we are at that point where it's that selling may go away. We'll see if that happens. I think a big indication would be that CPI report. Let's see where inflation is currently, since that is basically back in the forefront of what the Fed is continuing to look at. So right now, Wednesday, very important day. Thursday, important, but not as important as that CPI report. On Friday as well, members, we do have that import and export price, which is also an important number, and consumer sentiment to get a feel on the consumer mindset. So, members, we want to thank everyone. I know we're doing this a little bit earlier. We have some meetings to attend to later on this morning, but we wanted to get this done and out there for all our members. Thank you. Enjoy the rest of your weekend. Check the news desk and get yourself ready for Monday morning, everyone. The Squawk will be up as usual for the pre-market prep Monday morning. Thank you, everyone. Enjoy the rest of your weekend. And TradeXchange out.